Hello dear friends, Dmitry Invests here, and in this video we'll discuss open interest, an indicator that helps determine whether money is entering or leaving the market. This can serve as both a signal for a new trading opportunity or a warning that the position should be closed, or it might indicate that it's best not to trade at all. Let's look at a few examples to understand how this indicator can improve our trading results in practice. On the chart we see a dark coin, so this is how the trend starts. For a while the price was in a sideways trend with a little happening, but at the one point the open interest increased and the price also began to rise gradually. It's very important to remember that any indicator should be used in combination with other indicators that I will cover in my other YouTube videos, therefore highly recommend you to subscribe. However, I recommend using open interest in combination with the cumulative volume delta or CVD. This provides additional important information about the aggressiveness of buyers and the sellers, which can help assess the market situation more accurately. Same chart and the situation. If the CVD also starts to rise, it's a signal that an aggressive buyer has appeared. This is another confirmation of a strong bullish trend and a good opportunity to open a long position. From my trading bot, I received a notification about the increase in open interest and noticed a buyer aggression on the CVD. And right here, I opened a long position. Then there was a slight price drop along with the open interest. Probably some people decided to close their position with a 15% profit after a long wait, while others closed their position at a loss. However, we see that the CVD showed that buyers' aggression hasn't disappeared and their price continues to rise by more than 15%. And then I decided to close my position with leverage at a very good profit. Open interest is one of the most important indicators in trading that allows for a better assessment of the market situation. We can use this information as a signal to confirm the strength of a trend or as a warning of its weakness. Let's look at an example when it's not the best time to open a long position. Coin YGG. The price is rising along with the open interest. And here we see large green grow candles. Someone is jumping in and out of greed. They think the price will continue its upward movement, but we see that the cumulative volume delta is growing significantly along with the price, meaning there are no aggressive buyers, which is an additional signal of a trend exhaustion, indicating a likely trend reversal. If the CVD slows down or even declines, it's an additional signal of trend exhaustion, as aggressive buyers disappear at these price levels, indicating a likely trend reversal. And later we see the price drop by more than 10% in a few hours. Most retail traders use basic indicators and analysis methods, like MACD or RSI, which often give false signals and lead to losses. And some of you may have already experienced this. For example, the VGX coin price is falling, entering the oversold zone according to the RSI indicator, and then starts to rise. A beginner might say this is a good time to open a long position. They might even draw some trading pattern to convince themselves of correctness of their decision. The price might even start to bounce and rise for a while, but if the open interest along with the CVD continue to decline, it's a direct signal of the bullish trend's weakness and the high probability of the price continuing to fall. Just don't try to find the trading opportunities where there are none. Another example, Gala coin. We see the price, CVD and open interest moving in the same direction after a sideways movement. This confirms a downtrend. You can trade a short position along that trend, depending of course on the market situation, or wait for the trend to exhaust to take a long position. Let's consider some examples when a further price movement is questionable and at such times it's better not to trade. Coin JMT. We see that open interest is rising, but the price is falling. That means someone is taking aggressive short position, hoping for a sharp decline. The opposite may happen, the price might be pushed up first to eliminate those who successfully took short positions, and then the price will go down. In this example, we see that the price dropped by 3% in an hour, then rise by more than 5% in a few hours. This is a clear sign of price manipulation to gather liquidity in the market. And of course, I'll talk about trading from liquidation in a separate video on my YouTube channel. In this situation, it's 50-50, but we don't trade on luck. We wait for additional information from the market. Coin ORDI, open interest is falling and the price is in a sideways movement. This signals that traders are closing their positions, longs and the shorts, and leaving the market. Such moments are better not to trade, as we can't just predict will price go up or down. Also, in the absence of open interest, there is a chance we may stuck in a position for a long time waiting for any movement. And most importantly, there is risk of price manipulation that we cannot predict. Another example, coin flow, price and open interest are in a sideways movement. This means that the further price movement is questionable, and exactly the same situation there is a risk of being stuck in a position for a long time. We discussed several examples where in various market situations, open interest allowed us to make more accurate trading decisions. Now let's recap a few examples when it makes sense to open a new long position. Number 1. When after a sideways movement we see a sharp rise in open interest, indicating the appearance of new position, and if it is accompanied by a rise in CVD, meaning an aggressive buyer has appeared. In this case, it can be a great moment to trade the long position. Number 2. If the price has been falling for a long time and the open interest is flat in sideways movement, this signals accumulation, and if this is accompanied by a rise in CVD, the appearance of aggressive buyers, this means there is a high probability of a rebound or a complete trend change soon. The principle for opening a short position is similar, especially when after a sharp rise the open interest starts to decline along with the cumulative volume delta. But where you can find all these indicators? You can enable the open interest indicator on the CoinGlass website. Go here, click on Supercharts, then in Indicators enter Aggregated Open Interest Candles. To improve the quality of market signals, I recommend using open interest in combination with the cumulative volume delta. A fully detailed video about cumulative volume delta is already on my YouTube channel, so link will be in the description. I recommend watching it. And of course, subscribe to our Telegram channel, when you will find a lot of useful information from the world of crypto and trading. If you found this video useful, don't forget to like, comment, and of course to watch my other YouTube videos to boost your trading skills and results. Interest Invest. See you later.